6th of July. This is our first Insight session for the new financial year. Business Insights is a very exciting webinar series hosted weekly on Mondays at midday by a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscapes that impact how you do business. A panel of advisors aim to inform, educate, and provide strategic insights into financial landscapes that affect small businesses. We aim to guide our viewers to navigate business challenges through COVID-19 and beyond. Ladies and gentlemen, let's meet our panel or thought leaders. Just before we do so, I just want to remind you that the advice that's given on this panel is of the general advice only. Any personal advice, please speak to our panelists directly. Without further ado, I'd like to introduce Adam Lyle from O'Brien Palmer. Adam, how are you this morning?
Hey, Bernard, it's nice to see you back with us this week.
Thanks, Adam. Mr. Ian McLaughlin from Imperium Accounting and Tax. How are you, Ian?
Good, Bernie. Thanks for having me.
Ms. Lisa Garrido from Enigma HR. How are you, Lisa?
I'm good, Bernie. Thank you. Good morning, everybody.
Mr. Robert Skeen from Oasis Skeen Property Buyers Agents. Rob, how are you this morning?
I'm wonderful, thank you. Good to see you, Bern, and welcome to our visitors.
Mr. Sam Show Me the Money Qureshi from Money Clip Private Wealth. How are you this morning, Sam?
Hello, Bernie. Good morning, everybody, and happy new financial year.
Great to hear, guys. So let's get started. Ian, mate, I thought I'd start with you this week. What advice do you have for us this week?
Thanks, Bernie. There's three things that I want to cover off today. The first is going to be JobKeeper. Now, the applications for the payment of June opened on the 1st of July, and they will remain open until the 14th of July. So just a reminder there, what people need to do, they need to lodge their monthly declarations with the ATO in order to get paid. So they need to state what their turnover for June was, and then they need to estimate what their turnover for July is going to be, and also just maintain the eligible employees, because there can be times where employees may come off eligibility or they may come on for eligibility. So it's a really important piece, and just remember that you do need to go on and lodge those declarations in order to get paid by the ATO. The next one that I wanted to cover today, Bernie, was the New South Wales Small Business Grant. Okay, so this opened up on the 1st of July, and this is a grant of $3,000 for eligible businesses. So what I wanted to run through was what would make the business eligible for this grant. Now, you might remember that the New South Wales government had a grant of $10,000. Applications for that closed on the 30th of June. And this is another grant. So if you were eligible and received the $10,000 grant, you can be eligible for this grant as well. Now, much of the criteria is similar for the $10,000 grant, but there is one major difference. So to be eligible for this grant, as at the 1st of March 2020, you had to be running a business, and that means that you had to have an ABN registered. You have to have an annual turnover of more than $75,000 per year. You had to employ less than 20 full-time equivalent staff members, and you have to be below the New South Wales payroll tax threshold of $900,000. Now, you have to have experienced a decline in turnover of 30% from March to July 2020, compared to the equivalent period of at least 2 weeks in 2019. So the major difference there with the $10,000 grant was a $10,000 grant, you had to have a decline in turnover of 75%. So this one is just a decline in turnover of 30%, and you have to prove that it was for an eligible 2-week period compared to a period in 2019. Now, what they are asking for, I've had a couple of clients that have gone through this process, and they are asking for bank statements as evidence. So what I would suggest is make sure that the 2-week turnover that you choose, you do have eligible bank statements, and obviously also records from your accounting software to prove this decline in turnover. These, the applications for this grant can be applied for on the New South Wales government website. The next thing that I wanted to cover today was just the lodgement of income tax returns. Now, I know a lot of people are eager, and I did touch on this last week, but I just want to reiterate the fact that it is probably still early to lodge individual tax returns for the 2020 year. The reason being is that single touch payroll probably would not have been finalised for the majority of businesses, meaning that the ATO is not going to have all your details of what you're being paid by your employer. Now, just a reminder that businesses with 19 or less staff, they have to report the final single touch payrolls to the ATO by the 14th of July. And for businesses with employees of 20 or more staff, that's not until the 31st of July. But there are still a number of pre-fill reports that the ATO won't receive, such as the private health insurance rebates, amounts of interest earned, dividends paid. So my advice really is to wait probably until August, just to make sure that all those pre-fill reports are going to be on the ATO website. And the danger is, if you do lodge a return early, if then after that, some of these third parties report to the ATO their pre-filled data, the ATO will automatically amend your assessment. So it might be a fact where you might have to pay money back to the ATO. So my advice is just wait until at least August, but touch base with your accountant to make sure that all the pre-fill information is up there on the ATO website. So they're the three major points from me today, Bernie.
Thanks, Ian, mate. A lot of important information, and it's why it's very important that you have an accountant or advisor such as Ian. Sam, over to you. Tell us about any interest rates or home loan updates this week.
Sure. So in relation to the interest rates, really not a lot of things happened in the last week. The only thing was that last week I mentioned that ING increasing the fixed rates, and they've since reduced their variable rates. So that differential still is in favour of the fixed rates, but obviously it's part of the margin management for ING. What we are hearing a lot about though is the banks starting the process of getting in touch with people on their deferrals and wanting to find out whether people want to continue on with those deferrals, whether they want to start making payments or discuss other solutions. Some of the lenders are offering a switch from principal and interest repayments to interest only for a year as a way to help with your essentially your commitments and the minimum payments that you need to make. Ultimately, I think you need to just make sure that you speak to your credit advisor to see what's right for you. I've been asked a few questions about which one is easier to apply for, interest-only loans or principal and interest. So I thought I'd cover that off this week. Oddly enough, from a client's perspective, interest-only would be lower, obviously, because the commitment that you would have to pay is lower. However, this is the opposite from a bank's perspective. That's because the bank will use the shorter remaining principal and interest repayment terms to work out your commitment based on that assessment rate calculation I mentioned last week. I'll also add that interest-only loans tend to be between 0.3 and 0.7% higher in rates than principal and interest repayments. So you are going to be paying higher rates when you have interest-only rates. So as an example, if you take out an interest, a loan of 500K at 3%, the interest-only repayments will be 1250. So as a customer, you would think, okay, well, I'm making 1250, I can afford that. However, the bank does it a different way. They take into account the remaining term, which is 25 years from 30, and they'll recalculate that calculation for you. Now, that calculation turns out to be 2,371 instead of 1250. That's what they assume that you're going to make payment. But of course, they use the assessment rate to do that. So they'll use 3,070 as the number. So even though you think you're comfortable in making $450 per month, the bank is going to test to see if you're comfortable making a $3,070 per month commitment before they're going to lend you the money. So ultimately, you need to pay off these interest-only loans. And so don't forget that it's only good for a short to medium-term strategy, or if you're advised by your accountant, like Ian, the situation is like investment loan, and obviously based on your personal circumstances. Back to you.
Great information there, Sam. And just on the financial markets, how are they performing?
Well, ASX actually had a really good week last week, despite all the bad news was going around. S&P ASX 200 was up about 4.1%. Although US was closed on Friday night due to the 4th of July celebrations. So our market has opened up a bit softer this morning. I guess we'll have to wait and see what happens tonight, given that the US is setting all the wrong records at the moment, with the most number of COVID-19 cases increasing. Despite all that, ASX is still down about 10% since 12 months ago. However, I'll have to say that the star performer has been the tech-based index of Nasdaq. That has a lot of the your Apples and Microsofts and so on it, and they're actually up 25% since a year ago. So it just goes to show COVID-19 has had obviously had a lot of pain and misery attached to it, but it's also brought a lot of joy to those technology companies who benefited very much from what's been going on. And so I guess the surge of coronavirus in the US and recent developments even in Victoria is going to weigh a bit heavier over this coming week, and we'll see how that looks like as we go. Now that the end of financial year is here and it's gone, companies will start to report, or at least begin to temper investors' expectations about what to expect coming up. And those reportings will start throughout July and August. So whoever goes first will probably set the flavor of what that reporting season is going to be. So everyone's going to be waiting with an absolute bated breath to see what that looks like. And what they're also going to be telling us about what's going to happen to the dividends and how much they're going to pay out. And of course, we have a lot of people, a lot of self-funded retirees who are reliant on dividends, and it's going to have some impact on some of those. So, for example, up until now, the property-based businesses on ASX have been, especially on the retail side, they're reporting about 70% decline on their dividends that's going to be paid out. So that's pretty significant when you think about that. And of course, a lot of companies will recalibrate those dividends. So this is one area that everyone needs to be very mindful and certainly look to make other alternatives as well if they're relying on purely on dividends. Back to you.
Thanks, Sam. Some great information there. Really appreciate it. Lisa, over to you. What I want to ask you is, what are some of the challenges that employers and employees face in the new normal? Sorry, Lisa, do you just want to unmute for us, please?
Let me do that again. Thank you, everybody, for being so understanding. That's a rookie error there. So, guys, last week, if you recall, I focused on the push by employees to continue working from home. In fact, almost all employees in the survey that I talked about last week are keen on seeking flexi work conditions post-COVID-19. So the latest global survey by HRD, that's Human Resources Director, found that almost all HR leaders, in fact 91% of them, are keen on campaigning for remote work conditions and arrangements to continue post-COVID-19. So now this is now coming from HR leaders. In fact, 2 in 3 of HR leaders said they're offering remote working options whilst the COVID lasts, which, as you know, we don't know how long this is going to last for. So the survey also revealed that the policies that have been tweaked or amended amidst the crisis are definitely social distancing in the workplace has been amended. Restricting employee travel has been an amended policy as well. New hygiene standards and safeguarding mental well-being, which I'd like to talk a little bit about today. So most business leaders and HR leaders are worried, in fact, about the second wave, wherever region you might come from, whether it's Asia, the US, or Australia. And as you know, it is now happening in Melbourne or in Victoria, which is a massive risk to all businesses. So with the new financial year upon us, I would like to really talk about how we can engage with the new normal. And one of the challenges in the new normal is employee engagement as an ongoing challenge. There are 3 interconnected areas when you talk about engaging employees in their roles, and that's recognition, employee feedback, and any ongoing coaching or training. So recognition, as we all know, is multifaceted. It will vary from workplace to workplace, office to office, industry to industry. But in general, recognition is always a means to anchor behavior to a reward system where an employee or a staff member is exhibiting or practicing a company's core values. There is a book called The 5 Languages of Appreciation in the Workplace, and the two authors, Chapman and White, assert that recognition is not just a generational thing, where the younger employees or younger workers respond to recognition, but really cross-generationally, it is the single most important workplace motivator. So the situation is that most HR leaders or most employers will connect recognition, employee recognition, with a performance review or a performance management system. Now, that obviously will not work if we are to move into the new normal, because the humans need more immediate recognition if you want them to model the positive behaviors in the workplace. And an annual review would have lost its momentum if you only recognize on an annual basis. So the question is, how are organizations recognizing productivity now? Is it by output? Are you recognizing resilience? Or are you still recognizing alignment with the values in your workplace? And you know, all of these changes in the way that we measure output has changed drastically because we've been disrupted with the normal way that we engage and recognize our people. Should you revisit your performance goals based on output? And if you have you revised these output expectations? So that's one thing for us to think about, which brings me now to employee feedback, which is the second aspect that I wanted to talk about. We have already seen a shift from annual employee surveys to quarterly surveys amongst the workplace. So that frequent and consistent employee engagement questions are derived from getting employee feedback. It is a fast changing environment. If we are not complementing these surveys with on-time, real-time channels of getting feedback from our employees, we will miss out on the blind spots and not address these blind spots quickly. And one of the blind spots is mental health and well-being. So you can't wait until the next quarterly review or the next quarterly survey to be addressing what is affecting your employees now. So now is the time to rethink how you're gathering employee feedback. Do you need to triage the COVID situation in your businesses continuously? Maybe even establish someone in the workplace that is the contact, the COVID-19 contact, the person that is locally responsible for communicating any updates about COVID-19 and how the business or the office is responding to that. This person could be tasked with to provide visibility into the productivity and well-being considerations of the members in that particular office, region, or locale. So recognizing urgent needs is extremely important, which brings me to coaching, right? So how many of us are actually looking at the training and development needs even now in this pandemic period? And coaching and mentoring will definitely reinforce all the positive behaviors that we are seeking in our employees in these very trying times. So many companies have turned towards informal training and mentoring as part of their learning and development efforts. Again, should HR managers or HR consultants like myself be the mentors, because they sit outside the business or they sit within the business and have full knowledge of the challenges of the business. And with that in mind, can they help employees navigate through their own challenges as well? So those are the 3 areas that I wanted to cover with a focus on principally 1, focus on maintaining productivity, authorize any flexi work practices that you might have, ensure access, obviously, like I mentioned, to technology and keeping people connected and effective. Recognize this immediately and frequently. Second, remain informed, monitor any employee feedback as often as you can so you can act on them. Get updates from market intelligence, from consultants and specialists, lawyers, accountants, insolvency practitioners, financial advisors, etc., where it is necessary. And thirdly, offer coaching and mentoring and have an open and transparent behavior on how your business is impacted and how you're adapting and what steps you're taking. And that is definitely to minimize and reduce anxiety and stress. So that's the new normal. Good luck to all the organizations transitioning. Thanks, Bernie.
Thanks, Lisa. Always so insightful. And I can safely say, as the only millennial on the panel, that reward and recognition is very important. Thank you. Adam, I just want to ask you, now that the end of the financial year is now complete and we're moving into the new financial year, what's some advice you can give some of our businesses?
Yeah, thanks, Bernie. Look, I think the main thing is now, if the end of the financial year isn't a trigger to reassess everything, I don't know what else would be. You know, good accountants like Ian will tell you that milestones like the end of the financial year are really important to make sure that you are using them as a measurement tool. The main thing is to review your overall business plan, and every business should have a business plan. As the old saying goes, if you don't have a plan to succeed, you should plan to fail. And that's probably where the angle I'm trying to come in at with this. Look at all of your other strategies that should be the foundation and the support to that overall plan, including your marketing and your growth and your sales strategies. Look at even systems and see if they can be improved as well. The important thing here is to actively collect real data and real numbers from your business. And those numbers should be relevant and real today. You shouldn't be saying to your accountant, oh, can we go through the account? So, oh yeah, mate, I'm finished 2018, so we should go through that now. What? It's too old. You should be looking at these numbers that are real and looking at them that are as if they were yesterday. Because that's when you're going to be able to compare them to what your business plan was for the previous financial year. Were you within target, or did you exceed, or do you need to pick it up? And then reassess that business plan moving forward. The important thing here is numbers are just numbers. And if you can understand your numbers, that's great. But if you don't understand your numbers, you've got to get your accountant fully integrated into your business. And he or she should be giving you fantastic connected advice on how action within your business relates to performance and numbers over here. And accountants are people who basically take numbers in and tell a story. That's effectively the definition, certainly back when I studied, when Noah was a deckie, you know. So the whole thing there is to make sure that your accountant is actually integrated into your management of your business. A lot of people who I do come across have accountants. Oh, who's your accountant? Oh, yeah, I've got one. When's the last time you saw him? Oh, I think I saw him in 2019. That's wrong. You need to change that mindset. You should be talking to your accountant regularly, and you work out your pricing structure accordingly. So if something goes up, you need to be talking to your accountant about how to sustain that. If something goes down, you need to talk to your accountant about turning that around. And I'm not trying to take the limelight away from Ian here. What I'm trying to say to people is that use this end of financial year as a line in the sand. Change the way that you're doing your business and how you're managing it. And as some people say, how you work on the business, not in the business. The other thing is that the real effect of not doing this is that you do stand to be in danger of becoming a statistic. We are sweating on the insolvency numbers that are due to be released at the beginning of July for the last financial year. And there is a government moratorium in place to suppress the amount of insolvencies, but we are planning on a stark increase in insolvencies in the coming financial year. So if you don't have a damn good HR consultant, if you don't have a bloody good person who's managing your property portfolio, and you don't have a damn good financial advisor, and you don't have a good insurer, and you don't have a good accountant, I'm sorry, but you're probably going to be in a situation where you're going to need some insolvency advice at some point. particularly in the environment if you try and do something on your own without actually understanding the ramifications of your actions. So I know it's probably going to be seen today as a bit of a shameless plug, but the reality is getting a good business health check, looking at those plans, making sure they're in line with real expectations, particularly through this recession. And we only need one more quarter of recession and the word depression comes out. And whilst I wanted to try and prevent us from going in through to that period, if someone can tell me if September is going to be so wonderful that it's going to turn the entire recession on its head, then I'm happy to be corrected. But I don't think we're out of the woods just yet. So I'm hoping that everyone takes that on board. I'm hoping that everyone does pull out the bottom drawer, look out, grab the business plan and say, geez, it's been a while since we reviewed this. Let's get everyone involved and make sure it's real, it's relevant and renewed for the new financial year.
Thanks, Adam. So much passion. Love hearing you speak every week. Now, talking about passion, Robert, over to you. What's going on in property?
Thanks, Ben. Before I get into that, I just want to continue that as well. I mean, I'm amazed and blown away, coming online each week and hearing all this wonderful information, advice from you guys, the team here at Business Insights. It helps me within my business, and I've had lots of phone calls and emails over the last 8 weeks that we've been doing with people who are enjoying it as well. So for the viewers that are there today, please like our video, share our video between friends. Would really appreciate it. Let's keep the love going. Now, yes, back into property. Property listings were down this week with only 470 title deeds going under the gavel. So numbers were down. And I guess, it is winter, so numbers are traditionally down, but also it's school holidays. So people are away. Boy, I wish I was away. I think we all wish we were on holidays. And so the auctions spluttered along with a clearance rate of only 66%. Now, I say spluttered because last Saturday, I scheduled 4 auctions that I was going to attend. 2 of them didn't sell. And I was quite surprised with one of them because it was a really good 2-bedroom, 2-bathroom, lock-up garage apartment in the lower North Shore. A good sort of property that ticks a lot of boxes for people living in it or perhaps as an investment. Didn't have anyone. No one registered at all. Real surprise, and I thought it was priced well. The other 2 were over in the east, a good house in Randwick. It sold, but only 2 people competed, and by the looks of things, it sold under reserve because the owner wasn't very happy and the buyer was very happy at the end of it all. The last one was in Kingsford, absolute cracker of a home, character, good bones for renovation, great street, good aspect, and not surprisingly, it had a lot of interest. There were 10 people who registered, sold above reserve, but I've got to say when it came on the market, there was only really 2 people competing. So, out of the 10, only 2 people from reserve, and it sold quite well. So interesting. Market is not looking good at the moment in terms of real estate. So if you're looking for investment, I would say hold off. There's going to be better buying in the last quarter of this year and probably into next year. If you're looking for a family home, well, it doesn't really matter what the market's doing. Get in the market. You need your emotional security for a family home. But investment-wise, hold off for a while. That's all from me, folks. See you next week.
Thanks, Rob. Again, so much passion. And I guess that leaves us with general insurance. Whilst my other panelists will probably disagree, insurance is what makes the world go round. Ladies and gentlemen, general insurance, what is happening here? Sam mentioned a couple of weeks ago the impact and what cyber insurance is sort of doing. That's the topic I wanted to chat to you guys about today. Whilst there is a new norm, there's a heightened risk of cyber attacks sort of happening whilst everyone is working remotely. I know for a fact that the Australian Cyber Security Centre, or the ACSC, has observed an increase in COVID-19 malicious cyber activity. Their advice is to get guidance and protection and systems, and of course, to see what your general insurance specialist is doing. What is cyber insurance and what does it cover? Cyber insurance basically covers claims that relate to cyber attacks and cyber breaches. This may be losses that you as an individual or a business suffer, or it may be a hack that has impacted your clients. Now, what does it cover? What sort of cost does it cover? It covers IT specialists to come in and fix your systems in situations where your data has been breached. And if in a severe, severe example where your customers have been impacted, the policy covers costs in relation to notifying your customers of those breaches. Ladies and gentlemen, everyone sort of asks, the question that people should be asking is not if I'll get hacked, but when I'll get hacked. And when do I get hacked, and how severe that hack is going to impact your business, is going to differ. So my advice, ladies and gentlemen, to you guys, please make sure you take out a general insurance policy that covers cyber insurance, ladies and gentlemen. So that's it from me this week. I just want to open it up to the panelists. Do we have any questions for the panelists?
So, Bernie, was your joke of the day that the world revolves around insurance? Was that the joke of the day?
Definitely not. Definitely not. I'll leave the joke of the week usually up to Rob.
Very good. I've got a question for Ian. Ian, with the business grant, you mentioned you have to record 2 weeks turnover. Can you choose the period in that March to July that you can nominate as your 2 weeks of turnover?
Yes, you can. Yeah, it just has to be a comparable period. So you could choose from the 1st of March to the 14th of March, but then you just need to compare that with 2 weeks in the 2019 year, whereby you can demonstrate a decrease of 30% in turnover. But yeah, you can definitely choose the 2 weeks.
And can you other maybe as a homework for next week for you, how about if you tell us a little bit about potential other grants or grants that are available in other states as well?
Yeah, next week I'm going to be covering off the other grants, the similar grants, because the other states have released similar grants for small business. So I'll cover those off next week. And if we've got any viewers from South Australia, Tasmania, Northern Territory, Western Australia, Victoria, that'd be great. They could jump on and we can get a summary of those.
Ian, just to clarify, my understanding as well is that there are very specific industries listed in terms of the nominated industries for this 3K grant. And they're the ones directly impacted by the more recent lockdown. I'm not sure. I mean, there is a whole list of industries, aren't there? And we can access that information from what portal?
Yep. So it's it's a New South Wales government website where you can access these grants. Now, typically what's happening is if you are in one of these industries that was more affected, such as the restaurants and the gyms, then what we're tending to find is that your applications are pretty much going through straight away online. If you're in an industry that wasn't greatly affected, then they're requiring a little bit more information. So you have to remember that when you apply online, you have to put in your ABN. And when that ABN was set up, you would have stated what industry that was in. So if when you created that ABN, you stated that this is a gym operation or a restaurant operation, that is then linked to the application. So New South Wales government can see, oh, this ABN is a gym. Okay, well that was going to be that was an industry that was greatly impacted. Therefore, I'm finding that those applications are going through straight away. But just because that industry may not be listed as one of the ones that the government says, or New South Wales government says was impacted, doesn't mean that you're not eligible for that $3,000 grant, but you just have to do a little bit more information. Provide a little bit more information. Generally what they're asking for is a letter from the accountant confirming that they tick off each one of those eligibility criteria, and then they will just process the grant. And if they think it's satisfactory, then they'll push the money through to you.
Great. Any more questions from the panelists?
Just one quick one for Rob, if I can. So Rob, you were talking about potentially investment properties are going to be better if you wait. What's the current running yield on investment properties and houses and units?
Pretty poor at the moment, actually. And it's actually gotten worse because a lot of people haven't been able to pay their rents. So they've been negotiating with the landlords for to pay cheaper sums, and that's affected yields even further. Yeah, not very good, mate. I'd say they're down probably 7 to 8%. Great job today, Bernie.
Yeah,
Good
thank you, ladies and
conversation,
gentlemen. Just before we close off, I just want to thank again all the panelists for their time. There's a saying that goes, if you want to soar like an eagle, do not hang around turkeys. And ladies and gentlemen, it's no different to business. If you'd like to be successful, make sure you surround yourself with great advisors who can encourage you and advise you so your business can not become a statistic, like Adam said. So ladies and gentlemen, thank you again for tuning in. Make sure you tune in again next week at 12 o'clock. Thank you.
Well done. Thank you.
Bye.
Bye.